If you go in the back bedroom and you do this, you're going to jail. One of these days, $100 move is going to be no big deal. So no, none of this is shocking, nor are we even anywhere near the true fundamental value of an ounce of gold or an ounce of silver.
One stacker on a journey to find silver. International Stacker.
Ladies and gentlemen, the world is on fire, and as I once heard many years ago, shields are made of metal. And this is a silver shield right here, and I'm here with somebody very special. Her name is Lynette Zang, and I'm telling you folks, you're in for a treat on this interview. Lynette, how you doing?
I'm very happy to be here, so thank you for having me, IS. I appreciate it.
Now, I've been watching you for years, but I'm sure there might be a few viewers who maybe haven't seen your stuff before. So can you just give a quick summary of who you are and where you come from?
Absolutely. I've actually been in these markets on different levels since 1964, and I was born in 1954. So I learned from my Uncle Al, who is a major antique dealer, how tangible assets work. And we can get into that later. But I got into banking. I studied business finance. So I was a banker for many years, and then I became a stockbroker over at Shearson. I started in the 80s. I was there on Black Monday as a new stockbroker. Best day it could have ever been in the markets. But that's also where I started studying currencies and currency life cycles. I came into the metals markets after the formulas confirmed for me what was happening in the currency markets, and that was back in 2002. So I have been in these markets pretty much my entire life for about 60 years.
Wow. So with all that experience and background, is it crazy to see the price action on gold and what's going on in the world in silver? Is that shocking to you, or have we only just begun?
Oh, we have only just begun. I mean, back in 2002 and the early 2000s, if you saw the spot gold market move 50 cents, that was a big deal. But I remember saying at that time, one of these days, $100 move is going to be no big deal. So no, none of this is shocking, nor are we even anywhere near the true fundamental value of an ounce of gold or an ounce of silver. So that lies in our future. And that's a huge, I mean, there's so many huge opportunities. I can't even tell you.
Now, with the gold to silver ratio being above 100 to 1 recently, like for the second time in history, do you think that ratio is going to continue to like grow? Or do you think silver is going to finally break free of the manipulation and catch up a little bit? What's your thoughts there?
Well, first of all, I think it's going to be a while before gold and silver fully break free from manipulation. But having said that, I do think that, well, both of them are severely undervalued. I do think that we will see $50 silver and then a breakout. That could even happen this year easily. That could easily happen. But it still wouldn't take silver to its true fundamental value. And that's a point that I like to really bring up a lot, is that when you're watching Wall Street, they say, well, this is gold and this is silver. No, no, no. Those are spot contracts. They're supposed to represent gold and silver in the ground, unmined, unprocessed. But in reality, in the US particularly, most of that is being traded for contracts that, quite honestly, represent thousands and thousands and thousands of ounces of digital gold and silver that do not nor ever will exist, because with anything physical, there's a finite amount of it, but the markets read it as such. That is, well, that process has already started to shift once we saw all of the physical gold and silver coming from Europe and other parts of the world into the US recently. That, I think, is going to get much more significant, and we'll see it before the end of this year. But yeah, The true value of an ounce of gold is over 40 grand an ounce, and the true value of an ounce of silver is over $2,000 an ounce. And what are they trading at? $3,333. Come
Yeah.
on, it's a
Yeah.
bargain.
And I love that number of $50 an ounce. And I was kind of saying to my viewers, I think silver can do $50 an ounce this year. I'm hoping gold can hit 4,000. I think that's possible. Here's a nice little bar I bought in England when I went to visit another YouTuber named Backyard Bullion. But with that being said, I actually have the next question is a question from a viewer. His name is Numismatic Stacker. And he's curious if you think gold will outperform silver in 2025, or is silver going to finally step into the limelight? What do you think?
No, I think that gold will continue to outperform. And the reason why is because gold is the primary currency metal. And as we've been witnessing, it is really the only true flight to safety asset because it runs no counterparty risk. And so I think that gold will continue to perform it better than silver. But here's the challenge that you see me having, right? I don't give a crap about the numbers because I know they mean nothing.
Right.
And like I told you, I've been in these markets my entire life. And I do believe that it is critically important for everyone to understand the true value of the asset that they are trying to accumulate. You know, and it's not rocket science. You don't have to be a special engineer to understand it. It is really simple. This people would think of as money, and it is. It's fiat money, right? But it's created from debt. This is sound money that takes labor and effort and energy to create. So they're both money. They're just the flip side of the coin. So how do you know how much gold really is worth? Simple. You take all the debt. You can do it on a country by country basis, but frankly, this is a global issue, so I just do it for the world. You take all of the debt that's been created and use that as a proxy for all the money that's been created because, hey, they took the M3, all the money they were creating, away from us here in the U.S. in 2006. We don't need to know that. So, okay, use the debt as a proxy. And with gold, and silver as well, there's a finite amount of it. And gold is indestructible. And so we can account for like 98% of all the gold that's ever been mined. And it doesn't matter what the form is, which is why I love your table so much, because you've got all different kinds of silver there. And all of that is monetary at its base. But you just divide all the debt, buy all the gold, and then that tells you how much on a one-to-one basis gold is really worth. And then you can look at the historic norm and average on that gold to silver ratio. And then that gives you how much silver is really worth. Of course, silver gets used up in manufacturing, right? And even though both of these are used in every single sector of the global economy, and I know you've heard me say that ad nauseum probably, because it's so important for people to understand that you have the broadest base of demand with these two assets. But silver really does straddle the manufacturing end of it a bit more than gold does. And it gets used up, which means it's also a diminishing asset, which means it's really undervalued. But in all of the studies, and I run this all the time and anybody can do it, you can go into any currency converter and just pick any currency you want, measure it against, in the same time frame, measure it against the dollar, because that's what we always hear of, right? And then spot silver and spot gold. And in almost every case, not every single case, I just came up with one the other day that silver in a certain time frame had actually really outperformed gold. But generally speaking, it doesn't. Gold always outperforms. So for me personally, and as part of my personal strategy, silver is about barterability. So gold is, there are parts of gold that are about barterability, but gold for me is about wealth preservation. And when I do these studies, which I do them very regularly, where I'll look at a basket, a BLS, Bureau of Labor Statistics basket of food, and I can compare them from 1913, any time I want the same basket. And particularly since 1971, when we fully went off the gold standard, what you see is like that basket of food went up about 2,500%, something like that. Spot silver, even as manipulated as it was, still was up over 3,000%. So it maintained your ability to buy the same amount of food over time. But spot gold was up over 13,000%. So not only did gold maintain that ability, but it actually expanded your opportunity. And that's what we have ahead of us.
Yeah, and even like, so I've been stacking since like 2016, 2015 timeframe, and I actually got into metals through the crypto market. I was mining Bitcoin digitally while I was contracting in Saudi Arabia, you know, when it was cheap. And I had a friend there that was contracting, and I'm like, yeah, I'm into cryptos. And he's like, oh, I'm into stacking gold and silver. So that was my kind of like intro into it. I still mess around with cryptos, and I think there's use case, etc. But like, to me, like you're saying, having this physical stuff in your hand, I mean, you just can't beat it. And like, a government tomorrow could outlaw cryptos and then you can be in trouble, right? But if there you go. Yeah, I love that. But if they outlaw gold and silver, I mean, they can outlaw it, but they've got to find it. Unfortunately, I lost most of mine in a boating accident last week. And with that being said, I've been watching you for many years. And I remember you on several occasions talking about that we're in a paradigm shift. So what's your opinion on that, and where in that shift are we?
Well, yes, and what we're asking people to do is admit that we have believed a lie our entire lives, and that is so hard for people to do because, you know, they've grown up inside of this lie. And when a well-packaged web of lies has been sold gradually to the masses over time, the speaker will seem like a lunatic, but the truth is simply the truth. So yes, we are definitely noticing a paradigm shift. They don't talk about it too much here, but when you look at Costco, Amazon, and Walmart selling gold and silver, who are their customers? They're just normal moms and pops. Would they be selling gold and silver if the demand was not there? And they sell out of it as fast as they move into it, as soon as they stack it. So, you know, the shift is there. And then couple that with the second lowest consumer confidence reading in history. Okay. You know, as a technician, you're looking for where that bottom support level is. I believe that when we break below the low, and I'm going to do a little research on that this weekend, but when we break below the lowest confidence reading historically, which takes us back to the 80s when we were transitioning into this particular period, then I think it's game over. And you're going to be super happy that you've been stacking, and I'm sorry that you lost your gold. Like, why would you have it on a boat?
There you go. So if anyone's watching, I lost it in a boat accident. So I've heard you in the past talk about, you know, positioning yourself to where you have cash, and I do have cash, but here's some gold cash, some gold backs, right? But people should have some cash. And then secondly, to cash, they should have barterable gold and silver. And then third, like income producing assets. So kind of building on that, what do you think if someone's watching right now? And ladies and gentlemen, if you're watching right now and not subscribed to Lynette Zang, you've got to subscribe. The link to her channel is in my description below. But if it's someone just watching this for the first time, their eyes are just getting opened, like, what's the first target for them? Is it 100 ounces? Is it like $1,000 cash, 100 ounces? Like, what's a good goal for somebody new to aim for?
Well, I would say, first of all, you should call us, because what we do is we put your goals, your circumstances, what you have to work with. We take the time to lay all of that out first. But you're right. There is a particular percentage of cash and even the gold backs, right? I mean, I can see a place in that first rush of recognition. And then the level of silver and I like the pre-64, but I like in both gold and silver, I like it in fractional form, which means less than an ounce. So once we know what you're trying to accomplish and what your current cost of living is, then we can use those fundamental values to determine, well, how much and what kind of silver do you need? How much and what kind of gold do you need? So there's really no blanket answer. And the strategies, we do that for free because we are here to be of service. But it really is dependent upon your individual circumstances, because somebody that's younger, that is still working, and so they have income, is going to have a different need and have to be structured, at least in part of their portfolio, differently than somebody that's retired, that's living off of their dividends, let's say, or something like that. They're going to have a different level of cash needs, as well as silver and gold needs. And it depends on what they've managed to accumulate. So we want to sustain a standard of living. We want to protect whatever you've accumulated. And then we want to put you in a position to accumulate those income producing assets when they are undervalued, which they are not undervalued now. And we don't even know who's going to survive. Get to safety. Physical gold, physical silver. Let this whole thing play out. See who survives. What you're going to do is hold your purchasing power intact, right? To go into the new system. And that's why you end up much better off than you would be if you just stay all in fiat or intangible fiat, like stocks, bonds, all that garbage. And remember, I'm an ex-banker. I'm an ex-stockbroker. I understand this stuff. And I don't own any of it. So that much tell you something.
And I agree with you on the fractional 90%. I love it myself. There's a big old load of Barber dimes there. But that's awesome that you do those that for free for people, and you help people out for free, building a strategy, and then they can work with you to attain those goals. And I've got her website in the description below too as well, folks, if you want to take her up on that. I have another viewer question for you from MSid Music on Instagram, and he's asking, how long do you think that they can keep silver down? How long will the suppression last? When will it finally break free?
They can keep both silver and gold down as long as the public continues to trust this crap. Okay. That's why you might have noticed, if you've been watching me, how much I talk about consumer confidence these days, because again, it's at the second lowest level in history. And once it breaks below that, the lowest in history, you are going to see both gold and silver fly. But the point that I really need to make is Wall Street is never, ever, ever going to give you good price discovery. That's what it was originally supposed to do back in the day. But since everything has been converted and turned into a trading instrument, then what you're looking at is a trading price. And I love the fact that you have all of that physical, because I do too. And here's why. I mean, aside from all the obvious reasons. But in this country, in the US, most of these transactions in gold and silver are contracts. They're digital transactions. They're not the real stuff. Whereas in Europe, they are the real stuff. Well, what did we just see recently as the world started to turn away from dollars? And remember, the dollar is still officially the world reserve currency. We saw physical possession being taken of gold and silver. And that gold and silver was shipped over from Europe and other parts of the world. Now, specifically gold as the primary currency metal, and thinking about the Bank of England that has custody of a lot of gold from different countries around the world. And because in the US, all of a sudden, they were demanding the physical. Whoever it was demanding the physical. That day of reckoning, of sending over that physical to the US, I mean, you could definitely say that what we have recently seen is a repatriation of both physical gold and physical silver into this country. But on the other side of the pond, that payday has yet to be seen. Because what do you think might possibly happen when those countries demand from the Bank of England their gold back?
Mm-hmm.
That lies in our future. Let me tell you, when that happens, then you will see, because it's only being marginally held together. But what you will see is you will see the visible price of gold and silver explode because of the demand and supply dynamics.
Do you think it's going to be similar to, I think it was 71, where the world was trading in US dollars for metals, and then Nixon had to make that switch? Otherwise, we were going to run out of gold because we were rehypothecating it like out of thin air. So do you think when that happens, you're going to see a same effect in England? Or are they going to be like, oh, we passed a new regulation, we are no longer returning your gold? Like, what's going to happen?
Well, can you imagine if they did that?
I
They could do
know.
citizens a whole lot easier than they could do to another sovereign nation.
Yeah.
I mean, if they actually did do that to another sovereign nation, it would make $40,000 gold and $2,000 silver look like chump change. But having said that, it also means that this has absolutely zero value. You're not going to want to convert it. When the world realizes that these really have no value, but you can see it, and it's not just me saying it. You know, one of my favorite websites, if not my very favorite website, I use it all the time, is the Federal Reserve Education Department, the FRED, F-R-E-D. Anybody can go in there. I don't have any special privileges. And in that search bar, my favorite graph of all time, if they said I could only use one, this would be the one I would use. It is the purchasing, in that search bar, you put purchasing power of the consumer dollar. When you do that, you look on that left axis, so you'll see where the dollar started. When they started to transition into the new system, and a dollar bought a dollar's worth of goods and services, it's now officially down to 3 cents. But going back to that left-hand axis, what does it say on the bottom? It's a big fat goose egg, a big fat zero. That is the true fundamental value of all of this crap. So that's where it's going.
And I love that you just brought out all that cash. I actually ran across the studio real quick and I grabbed a bunch of this Zimbabwe, right? So like when gold is $40,000 per ounce, do you actually want those dollars? Probably not. And like, you know, I had watched for years like Mike Maloney's Secrets of Money, and they're talking about the death knell and the dollar and all this and that. And then recently seeing like, you know, Russia and China and different countries and BRICS and working together to kind of make a kind of counteract or circumvent the US dollar. And then recently with the downgrade of the credit score, I actually had a viewer, Silver Sea Captain, he wanted me to ask you that how do you think that the downgraded credit score for the US is going to affect the precious metals market?
For one thing, all of those things that you talked about, the world is turning away from the thought that dollar and dollar denominated assets are safe haven assets. And it has evolved, and we've just seen it in the spot run up in gold, even though that's not an accurate number. But you've seen that gold is the only safe haven asset, as is physical silver in your possession, but this is the primary currency metal. That's why all of that gold transferred to physical to the US. That downgrade is the last one. The first one was 2011 S&P. The second one was 2023 with Fitch, and now finally Moody's. But there are mutual funds and different pension plans around the world that can only hold AAA rated paper in them. And that means that whatever treasuries that they were holding because we held on to that last little AAA rating, boy, those treasuries on the secondary market, aren't they? And what is that going to do to interest rates? Because keep in mind, this is my sterling silver chopstick, right? Interest rates, market value of the bonds, right? When they sell those bonds, that pushes the interest rates up. And we're seeing that. We're definitely seeing that. And then what that does is it pushes the market value of the bond down. Now, think about all of the debt that was accumulated in 15 years of ZIRP, zero interest rate policy. The banks and the central banks that bought all that garbage, they are so underwater. But when they started to raise those rates in 22, they broke a 44-year trend. Does anybody talk about that anymore? No. Nothing to see here, folks. But guess what? The reality is that there has the bond bubble has been popped, right? Period. And you can't put that genie back in the bottle. And that's why it is so critically important that you have this physical metal, the real money in your possession, because it's that lack of confidence that you mentioned with the BRICS nations and all those countries turning away. And when the U.S. used the global payment system that we own, SWIFT, to punish Russia or other countries that aren't doing what we want, the whole world stood up. So it takes a while before the public notices these things or before it becomes apparent. But that part, quite honestly, I like to look and go, what if I'm right and what if I'm wrong? Is there something that I can do that will not matter whether or not I'm right or wrong? That's what I want to do, because then I don't have to think about it and I don't have to worry about it. I am prepared. And that's, I love seeing all of that. I mean, yeah, all of that physical metal on your desk. I love that, because I am definitely these days a very, very tangible gal.
One of my other viewers on YouTube had asked a question. His name is Underground Metals. That how many years left do you think until the dollar collapses? Like he knows it's hard to estimate, but it's a 1 to 3 to 1 to 7. But I'm going to tag on to that. So what is the dollar collapse going to look like? And is it just going to be a new monetary system that rises from the ashes? Like, what's going to happen?
Well, it's interesting when you became part of this, first with the cryptocurrencies and then with the gold and silver. I would say that it's closer to the 1 to 3 year range than anything else. But again, it's going back to this confidence, because this is a con game. That what creates and supports this junk? The full faith and credit of the government. This that has global demand, right? Just the faith and credit. And how many people have taken a second to just define, what does that mean? All right, well, full faith. So if you trust the government, you have confidence, you have faith in them, you will continue to loan them money, extend them credit. And what we are witnessing, going back to the last question on the AAA rating and your comment on the BRICS and all of this stuff all started in 2008. That's actually when the system died, and it was simply put on life support. And I personally do not, having studied currencies and currency life cycles since 1987, for goodness sakes, I do not think that it was a coincidence that Bitcoin came out in January of 2009 and quantitative easing March of 2009. Coincidence? I don't think so. When I first started looking at Bitcoin, it was $7 a coin. And you could say to me, well, Lynette, did you buy it? And the answer is no. And I'll tell you why. And then you might think, I'll tell you why in a second, because you might think, oh, look at you. It's over $100,000 a coin right now. And I'll bring out my Bitcoin. This is just a physical representation. But I'll tell you why I didn't buy it. Because I 100% knew when I saw it that this was the next beast that was coming, and I could not and cannot support the lie. I just cannot do it. That's my integrity speaking. I do what I say, and I say what I do. And I can't tell you, I mean, everybody's got to do what they're comfortable with. It doesn't matter what I do, what I say. But I can't tell you to do something that I'm not doing for myself. And by the way, what color is Bitcoin? The representation of it?
Gold.
Gold. And cryptocurrencies are what? Gold, silver, or platinum. Why aren't they purple, green, or orange? Because people, even though we've been taught away from gold and silver as money, quite honestly, it's still in our DNA. It's still the golden goose, good as gold. It's in our vernacular. It's all over the place. And when push comes to shove, like we saw back in 2014 during the sovereign debt crisis in Europe, how did people survive that? And Portugal was one of the countries, particularly Ireland. They used their silver jewelry, their silver flatware, their gold jewelry, what they had. They used real money to survive that.
Yeah.
That's not long ago.
That's not long ago, and here's some other silver bars from the Mandalorian, and that's what I like too about silver. Like this is like Game of Thrones. You could do fun stuff with it. But back to the discussion at hand. The point you made about cryptos, I agree with, and here's what I think. I think any government around the world would love a digital currency because then you can like get maximum taxation. Every single transaction is classified in these buckets, and you're taxed, and then also, too, like, look what happened in Canada with the protesters, the truck protesters, and their accounts got shut off and stuff. So, like, imagine, like, if there's, like, a protest in Sector 9 or Sector 7, and all of a sudden, like, oh, all your money's shut down. You can't even go there type thing. You know what I mean? So, looking into that, I think that only drives home the importance of gold and silver. Because if stuff eventually does all, switch digital, this is your way to, stay out of the system. And I've heard you even say that before. It's a way to stay out of the system and protect yourself. And I like one other thing you used to say, which I've repurposed a few times, and I did not ask for permission.
That's okay. You use whatever you want to. It's you have my full permission anytime.
Nice. I love your point about dynastic wealth. And my hope with the majority of my stack is that I'll never have to touch it. I could build dynastic generational wealth that I could pass down. But in an emergency, you've got like these dimes you can barter with. You got like the gold backs, you got fractional. And I love that. And like for me, like my professional life for years was emergency management, helping governments on the country level prepare, respond to, and recover from disasters, right? So to me, that goes right along with it. And every hurricane season where you see people yelling like, where is FEMA? We have to be our own first responders. We have to prepare ourselves. And that's something I really believe in. What's your thoughts on that?
Oh my gosh. Well, that's where community has really risen to the very top of my list in importance. Because in 2008, I absolutely 100% knew that the system had died. And I was in a little 2-bedroom townhouse or condo getting ready to retire. And clearly I did not retire after that because I did not think I would see it, in my lifetime. And this is what I have been born to do. But I have had, goes back to the timing question, I've had all of this time to push together and create food, water, energy, security, barterability, wealth preservation, that community peace and shelter. So, and I've been fortunate enough because I'm seeing what's coming to surround myself with a supportive community. So I actually, 85% of everything that I eat, and if I needed to, it'd be 100%, come off of my little half an acre urban farm in the middle of Phoenix. But I don't think we have that time. So coming together in community, bringing what skills you have, bringing what, and skills are an asset and they're barterable. So, maybe someone can't afford all the gold and silver, but they know how to lay irrigation. They know how to plumb. They know how to electrify something. Coming together in community is what we really need to do. Local community to secure your food, because food becomes the single biggest issue for people during these periods of time. And we can see down in Venezuela, this is the kind of stuff that Venezuelans have been using, and also fractional gold, to, if they've had it, to sustain themselves. But you need to come together in community on a global basis as well, because we have to have a sound money movement. This is the best opportunity that I have ever seen in my entire career to actually get, or have the potential to get, sound money back in the monetary system again. It won't happen unless we demand it. How do you demand it? You vote with your purse. You vote with your wallet. You convert this garbage into sound money. And if we can get 3%, just 3% of the global population to convert their fiat money, their government garbage money, into sound money, I think we have a solid opportunity to have a seat at this table, meaning a say in the new monetary system. And here's the key with that, right? It must be redeemable. In other words, just like it used to be, right? We started out with this. Oh, how inconvenient it is to carry all this heavy gold around. I'm happy for the inconvenience. But hey, this is so much easier, right? This is a $20 gold certificate. So I could walk into any bank with this if I didn't like what the government was doing, and I could pull out this. Well, guess what? At the same time, this was also put in circulation since 1913, right, to 1933. All three of these were in circulation at the same purchasing power level. This was $20. This was $20. This was $20. Nominally the same, right? So we, the public, had 20 years of getting used to using this. So in 33, when they took these two away, well, they still had this. Nothing had changed. That was the assumption. When in reality, everything had changed. This is now at, 3,400 on the manipulated spot market. This would be worth about 6 cents. And this is merely a collectible.
That's quite shocking how you lay that out there. We're looking at everything on the micro, but when you zoom out the macro and really break it down and look throughout human history, and here's like a couple Roman silver denarius, and we all know what happened with Rome and debasement, and what we did, in modern days with debasement to rehypothecation to total divorce from the money or the metals. My question for you is, what is the next warning sign for people to watch for? So we just had the Moody's downgrade. We've had the different events in the past. What's like maybe one or two items that's kind of on your horizon or radar that people could watch for? Like, what do you think would happen next if this like death spiral or death rattle of the US dollar continues?
Well, it will continue because we're at the end. There's virtually no purchasing power left, but pay attention to the confidence and the expectations, just like the government does. Right? Because you think about it. When you've got a con game, you need that confidence, but you also always need new money. Oh, what is this? Oh, a brand new. How do you make a mint? The 1996 NSA white paper, right? Talking about cryptocurrencies. Have you read that, by the way?
I have not.
It's a very interesting read. And, it's available to anybody, but they have been planning this. I don't think that this was, a lot of people did it because they thought it was outside of the system. I don't know. does anybody really think it's outside of the system now? Because if you do, there's this bridge in Brooklyn that I'd love to sell you, right? So, yeah, it's the confidence numbers. If you're only going to pay attention to one thing, if you're going to pay attention to two, pay attention again in the Federal Reserve Education Department, the M2V. That is the velocity of money. And which means that's the number of times that money changes hands, right? Mm-hmm. And what you'll notice, because there is a point where taking on debt is actually stimulative of the economy, right? As long as your income can keep pace at least with the debt and the servicing of that debt that you're accumulating. However, we all get to a tipping point. And in the US, that tipping point, and you can see this very clearly on the chart, was 1997. After that time, taking on more debt was no longer stimulative. Why? Because the interest on that debt had grown so large that the income that the government was generating from taxes and fees, mostly taxes, wasn't enough to pay all of the interest on the debt, so that the excess interest went into the principal, and we were now compounding interest. So just putting it on another level, because truthfully, whether you're a government, a corporation, or an individual, these things all work the same. It's just a matter of scale and ability, right? If you go in the back bedroom and you do this, you're going to jail. But they can do it all they want because they've legalized it and somehow we've agreed to it, okay? So what you really want to look for, what you'll see when you look at that chart, is that since 97, it has the speed at which money changes hands has been declining. A little teeny blip here, a little teeny blip there, but declining very dramatically. Even worse, in 2013, it was already worse than, according to the Federal Reserve, I believe it was the New York Fed that came out with this report, than it was during the Depression in the 1930s. But there has been a dramatic pattern shift upward. I'm all about patterns, and I'm all about pattern shifts. And people don't even really need to understand it or exactly what that means. What you need to do, whenever you're looking at any chart, grab a ruler and start drawing lines, and you're going to start seeing these patterns, and you're going to start seeing when these patterns change. And when a major pattern changes, what it means, either to the good or to the bad, but something major is on its way. So in 22, that had to do with the interest rates breaking a 44-year-old pattern. That means that there was a structural shift in the global debt market, which is how money's created. And forgive me on this, but you cannot fix a too much debt problem with even more debt. And if you look on the debt and deficits, I think we're at like 1.8 trillion in deficit spending through the end of last year, and that's about to get worse. But we're servicing over 36 trillion in debt. Why? Because those big deficit numbers only kicked in 2008. That was the first time we went to a $1 trillion deficit. And at that time, we were servicing 2009, because I did a study on this. 2009, that's when I said, well, wait a minute. We've only just hit $1 trillion in deficit spending, which is spending money you don't have. So you think of it like a credit card. How come we're servicing 13 trillion in debt? Well, the good part about the Fred is that you can go, there's an area up there where you can click and you can look at all the past data. They've got all of it. And you can copy it, put it on a spreadsheet, play with it. So how do you get out of debt when you are compounding interest and they lie to you about the interest payment because they're only showing you, they're not showing you the compounding interest. They're just showing you this little bit of interest that they're going to pay this year, which, by the way, is even larger than all of the military spending. And that's going up. Yeah.
Yeah, that's crazy. And I'm actually going to link below the link to that chart you're talking about with the Fred, because I think it is important for people to see. But not everyone has your expertise. So if people want to follow along and hear from you as you start to recognize these different shifts and things that are going around, how can people find you and follow along? And if they have questions, how can they bounce them off you?
Oh, I love that question, that last one. I'm very, very prolific on YouTube and Twitter at the Lynette Zang, Instagram and Facebook at Lynette Zang, and the website is LynetteZang.com. However, every Tuesday at noon Arizona time, I do a live Q&A, which yesterday ran to 3 o'clock, so 3 hours. And I could have probably been on for another 3 hours, except I had another appointment. So I love doing things in person. I do events regularly. I'll be in Vegas at the XRP event the end of this month. I think it's May 21st or May 22nd. I'm not really sure, but if you check the socials, they'll have all that up there, and you can see me and ask me questions in person. I love questions.
My last question for you, because I know you're busy. You're out there changing people's lives, and I think that's awesome. And like, one of the reasons I started my YouTube channel back in the day is like, I found out about it. I was like a believer. I'm like, well, if I could just share the knowledge with 2 people and they share it with 2 people and it kind of builds that community you're talking about. But if you were just got into an elevator with somebody and you had like a 30-second elevator pitch on why they should be into physical gold and silver, what would you say in that 30 seconds?
According to the Bank for International Settlements, which is a central banker's central bank, gold is the only financial asset that runs no counterparty risk, geopolitical risk, is a proven inflation hedge, and is a war chest asset. Look around the world at what's happening. You want protection? Here it is. And there's nothing else that can do that.
Lynette, this has been such a great conversation. I hope it's the first of multiple because, first of all, I've been a longtime fan of yours. I've learned a lot from you over the years. And I think the viewers are going to love this and have even more questions to ask you. So I hope we could do something in the future. But with that being said, thank you for coming. Ladies and gentlemen, you just watched this. It's time to prepare. It's time to get serious. And Lynette, what do we say?
Catch you on the next one.
Catch you on the next one. Hey, Lynette, why don't you hit us with your outro catch tag?
If you don't hold it, you don't own it. And until next we meet, please be safe out there.
One stacker on a journey to find silver. International Stacker.